Hi, I'm Peter Rose, founder of Longwood Currency Trading. Do you really want to be a long-term position trader in Forex? That's a question that I get quite a bit. Why don't you position trade? Why are you a day trader? It's so dangerous down on the daily day trading time frames, the 15-minute, 5-minute, 1-minute, God forbid the 5-second, but characteristically day trading 5-minute time frame. There's so much noise. There's so much confusion down there. Why not just check the daily candle at the close of wherever your session is? New York, it'd be 5 o'clock. You get home from work, you check the positions, you make your trade, and then you let it sit for 6 or 8 days, and you make 400 pips. Really? Well, you might be able to do that in stocks or futures as a beginner or an intermediate trader. But I think you really need to be an advanced trader in order to consider doing position trading. Now, I have lost the most money when I do a long-term position trade. I've made money on carry trades, but I don't set out to have the trade go for a long period. I'm a day trader. I want to be flat at the end of the day. I don't want to have to check my charts in the middle of the night. I don't want that hanging over me, even though perhaps you could trail a stop behind you. I'm not a big fan of trailing stops behind me because that abrogates my responsibility as a trader to be there to trade. What am I going to do? Let my random brain say, oh, I'm going to trail a stop 10 pips, 20 pips, 15 pips. What do you got behind the current price? What good does that do? You have to be a trader to be there in front of the price action and look at that price action and say, Jesus, it's coming back against me. But, if you're trading a USD pair, you can say, geez, but the Dixie's holding up. It's doing better. USD should be going up, but it's going down here. Why is that happening? It shouldn't happen because of blah, 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 blah. And you know enough about the economic conditions and climate and all that other stuff to make a reasonable judgment and say, nah, I'm not gonna get out of that in 10 pips. I'm just gonna sit there. I've got a 40 pip profit, and I'll give up 10 or 20 pips of that because I'll get out it and I'll make 20 pips on the trade when my normal expectation might be 12 or 15 pips on a day trade. So carrying a trade over when it's far in excess of where your profit target is and trailing a stop is fine. But I think you need a horrendous amount of experience to go into a trade and say, oh, I'm going to pick the close of this candle, and I'm going to make my daily candle, and I'm going to make my decision as to a position that I'll be in for the next 4 days, 2 weeks, month, or whatever. I don't think the skill level is there to do that, and I don't think the appreciation for dealing with price pullbacks is appreciated by those who can trade on the daily chart, for example, and who can say, I'm going to trade on the daily chart and I'm going to make 400 pips. Okay, that's your profit target, 400 pips. How much risk are you going to take? I'm not a big fan of risk reward, so I'm not going to talk and say, well, I'm looking at 400 pip gain, so I should take 100 pip loss. I don't believe in that nonsense. That's just foolishness. It just doesn't make any sense at all. What I'm looking at is, where should I put my stop in relationship to the magnitude of that daily candle, which is 80 to 120 pips on the major pairs? Are you going to put it at the terminal point of that last daily candle? Well, you wouldn't do that, because the next daily candle could move up 10 pips, and then it could come down 85 pips below where the day candle, the last one, is, where your stop is, and take you out, and then turn around and go. You wouldn't trade on a 5-minute chart with a 5-period ATR and set the stop 5 pips below where the top of the close of the closing candle is. Why would you do that? You wouldn't. You'd set it maybe 10, maybe 20 pips, whatever your proclivity in day trading is to set those stops. So why would you do it any different if you're a long-term position trader? You have to do it in some concept of the ATR on that daily chart, because you're going to have those swings. On the 5-minute chart on a major pair with a 5-period ATR, you're going to go up 15 pips, and then the likelihood is that it'll swing around and you'll have an 8 to 10 or 12 pip retracement. Those are just general characteristics for one particular major pair, maybe, let's say, but it's exemplary of what's going on in price action. Order flow created by institutional clients and hyperflexed by retail traders. So when you're position trading as someone with not quite enough experience, and I'm not going to define what I think enough experience is. I don't know, maybe you can do it in 2 weeks. I don't give a shit what you do. Okay, I'm just saying in general, if you're not able to be consistently profitable trading on a day trading basis with a 20 pip profit target, and you don't understand the value of getting 5 or 10 pips out of a trade, then I don't think you should be trading. You can make a really good living on 5 pips. No. You can't do that on your little mini account unless you're trading 500 to 1. You can't do it on a full lot, trading, $10,000, $6,000, $7,000 on a full lot. Maybe you need 3 full lots at $6,000 a piece to take up the margin and give you a little bit of runway. On the 5-minute chart with a 5-period ATR, setting your stop 10 pips below that, and then letting that thing run and ring in the cash register when you get 12 or 15 or 20 pips, and you close it out at the end of the day. Maybe you close it out at the end of the day with 3 pips. If you could get 3 pips a day, it's 0.3% per thousand. So 0.3 of a $100,000 account. You make. You say you're trading a 10 lot. It's $100 a pip. That's $300 on 3 pips. Make $300 a day. That's $72,000 a year. How tough is it to make $300 a day? You go in, you come out. You made $300. I think the problem here that attracts people to the daily chart is everybody says, oh, I'm going to grab 50 or 200 pips or 400 pips. You hear these guys all the time. Oh, we're just getting hundreds of pips. No, you're not getting hundreds of pips. You're getting a couple of 100 pips of real pip, but 600 pips maybe because you're trading a 5 lot, and each lot you're counting as 200 pips. So you're getting 1,000 pips. You're getting 1,000 pips of money, but you're only getting maybe 100 pips of actual pips. If you don't understand the dynamic relationship between the pips and the dollar value that pip represents based on the size of the bank that you're trading, you really need to step back and look at your fundamental knowledge of the currency market and how all of that is fueled by the order flow, again, put up by the institutional clients and hyperflexed by retail traders. I'd rather be on a 5-minute chart with a running position, see some hesitancy in that price, drop down to the 1 minute or even the 5 second, and see what's going on. And if I get some price chatter going on, I'm out. It doesn't make any sense to me. I'm a math guy, so I've done the math. If you're skilled and you have the experience to deal with all this stuff and you know how to run a stop, and your win-to-loss ratio is good enough so that you're not constantly getting bopped out. When you go into a daily trade, you just can't set a 20 pip stop and say, oh, well, if it doesn't go in my direction, I'm out in 20 pips. That isn't long-term position trading. That's no better than a day trader. A day trader will set a 10 or maybe a 20 pip stop, depending on their experience level. The more experienced you are, the further out you can put your stop. You'd think it would be different. But if you're not experienced, then do you want to lose 20 pips or would you rather lose 8? Well, I'm going to lose 8 pips a lot. Yeah, you're right, because you don't understand entry analysis. So wouldn't that be the problem to tackle rather than extending your stop down to 20 pips and having that hit all the time because you don't understand entry? Well, what's going to happen if you try to trade on the daily charts? As I had mentioned before, and many times in my videos, whatever you learn and are able to do to gain consistency and profitability on the 5-minute chart as a day trader, those skills are mapped directly up into the daily candles, into long-term position trading. But if you learn long-term position trading, you're not going to be able to do swings, and you're not going to be able to do day trading, and God forbid send your little anal sphincter into complete overload if you even thought about scalping. It's not a very big jump to go from day trading to long-term position trading, and it's not very much of a stretch to drop down and do scalping. If I'm trading in a chop and I can only get 3 pips because the thing is all over the place and I don't think I'm going to be able to get 10 pips, I'll take 3. Because again, on a 10 lot, that's $300. A lot of people don't make $300 a day. And when I'm trading with a 10 lot, my profit is looking at 8 or 10 pips, $1,000, $800. So I take 300, but I've still made more than most people make. Yes, it takes a big bank to do that, but I mean, what do you think? You're going to come into trading with a $10,000 or $20,000 account and replace your job income? If your job income is $10,000 and you got a $10,000 or $20,000 account, even if you got a 60% return, it'd be $12,000 on a $20,000, right? So what percentage return are you getting now? And how long are you going to have to wait to develop those metrics that I talk about all the time when you're trying to do that on a daily chart? How many times are you going to trade? If you're trading on a daily chart and long-term position trading, how often are you going to trade? A long-term position to me is weeks, not 2 days or 4 days. If you want to trade on a 4-hour chart and trade for a few days, that's not long-term position. Well, I mean, anytime you do a carry trade, you're a position trader. Unless you're doing swings, and then I don't know how you can step away from the trading platform unless you have a real good trading platform language that you can do OCO type trades. But I feel that the skill here is what you're really needing to consider. You need a lot of skill to be able to look at a daily candle and say, this has whatever it takes to go 300 pips, which would be the least I think you'd want to go for on a long-term position on the daily candle. Well, what are you going to do? You're going to trade on the daily candles and take 20 pips or 40 pips and go, Yahoo, I made 40 pips. And you're taking a 200 pip risk to make 40, or you're down on taking a 20 pip risk to make 40 pips. You're not. You could do that as a day trader. Why would you take the added risk of higher stop out risk and trailing stop to be a position trader when you could do that same thing on a day trade and be flat at the end of the day, and you either made money or you didn't make money? And if you didn't make money, you can ask yourself, I remember exactly what I did today. Why didn't I make money? Where was my malfunction? So these are the things that I think you really should be considering before you decide you want to listen to some of these folks that are saying how safe it is to trade up on the daily candle and be a long-term position trader. There's a whole other rationale and thought process behind that. And it's why in the coursework that I offer and the training I offer, it's day trading. Because again, those skills are, if they're taught right, those skills are transferable into the long-term position trading once you become profitable and consistent and experienced, you may want to go on to those longer term position trades, and you've built up a net bank that's pretty sizable. And so taking maybe a 200 pip or 150 pip risk isn't going to be that big of a deal, because if you're a 70-30 trader, hey, you're going to lose that 3 times and you're going to win big money 7 times. Or even a 60-40 trader, you're going to bank out pretty good. Take a 200 pip loss 4 times, or you take a 300 pip or 400 pip gain 6 times, you do the math. So, but these are considerations that I think you really should, well, consider before you listen to the chit-chat that's going on in Videoland out there about how safe the long-term position trading is. It may very well be, but you have to ask yourself the question, how experienced do you need to be, and what characteristics do you need to have in order to be a long-term position trader? I can't imagine anybody saying that day trading is too frantic for them. Really? You got an hour to 2 hours to trade. That's how I teach in my coursework. That's the assumption that I'm making. I'm assuming that 95% of the people that are interested in trading currencies only have an hour or 2 hours, maybe 4 a day to trade. So I say, oh, okay, well, let's see. I'm sure that if you had a normal job, you could carve out 2 hours either in the morning or when you come home at night. Although at night you usually have a lot of responsibilities with the kids, you cut the grass and all that other shit that you got to do. So a couple hours in the morning. So what can you do in a couple of hours to trade as a day trader? We trading down on the 5-minute chart, yeah? And so there's 12 decisions an hour. So you have, because on a 5-minute chart. So you have, in a 2-hour period, you got 24 opportunities to decide whether you're going to get into a trade, add to it, or get out, or don't trade at all. You have 24 opportunities to decide. Now, the question is, well, what happens if it's an hour and 48 minutes and you see that there's a trade there, but you got to go to work? What do you do? What do you do? You don't take the trade. You go to work. I mean, it calls for discipline. If you're not disciplined, then you shouldn't be a day trader. But then you shouldn't be a currency trader either, because you're gonna lose your money. The statistics are against you. It's 90% against you. It's the highest at-risk thing that you can get involved in. And you can lose 100% of your money in one trade. Please, when you're looking at what you want to do, be sure you understand the ramifications of not only what that involves, but also who you are as a person. And if you're listening to everybody and saying, oh, it's so frantic down on the daily chart, why don't you go down on the daily chart in a demo account and trade for a couple of days at an hour a day? It's not frantic. It's a 5-minute period between decisions. You go out, take crap, and be back in 5 minutes. So readjust your thinking based on the reality of the market and who you are, and say, I understand that I'd like to be a long-term position trader because my personality fits that more, and the type of work that I do would be dovetail really nicely with the position trading. And I understand what I have to do in order to do that. So I should learn my skill sets where I have the opportunity to make many decisions, so I can determine whether I know what I'm doing or not, to take that additional risk. And then you'll see that day trading is not that frantic at all. You want to do scalping, well, that can put some pressure on your anal sphincter, but I mean, I scalp. When I'm trading, I'm doing a day trade. If the trade runs over into past my profit target or whatever, it's really screaming, I'll throw a run stop behind it and I'll go to bed. I'll carry it over. I haven't been very successful at carrying it over very much because of those retracements. And those retracements can be brutal. I was looking at the chart today on one of the currency patterns. There was an 80 pip retracement on a 15-minute chart. 80 pips. I mean, come on. And then it turned around and went 100 or 200 pips in the other direction. I mean, that's really moving. Would you want to be a long-term position trader in that kind of movement? It'd be difficult. So gain your skill and experience down on that daily chart, unless you just absolutely don't have the patience for it. And then again, if you don't have the patience for that, and you think you're going to find comfort in the long-term daily chart, you're going to be up there sleeping at night wondering what the hell the position is doing. You're going to be up every 3 hours checking the price. That'll make you crazy. Do you really want to be up on the daily chart trading long-term position? Ask yourself the long-term position versus my characteristics versus the day trading, and make those decisions that way. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.